Hey everyone, welcome back to Corporate Decoder. Today, Mobile Infrastructure Corp just filed a report about paying preferred stock dividends, and I am seeing a familiar pattern that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is paying out dividends on their preferred stock, and this shows a commitment to those specific shareholders, even as the broader market for infrastructure companies is seeing some pressure. Alright, let's dive into what is happening at Mobile Infrastructure Corporation. On the 22nd of July, their board of directors gave the okay to pay out some dividends on their preferred stock. This is a pretty standard move for companies to keep their preferred shareholders happy. They authorize payments on two types of preferred stock, Series A and Series 1. For the Series A preferred stock, holders will receive $4.79 per S-share. This dividend is expected to be paid out around the 12th of August. The record date for this is the 28th of July, meaning you had to be a shareholder by the end of that day to get this payment. Then there is the Series 1 Preferred Street OC. These shareholders will get $4.58 per S-share, also expected around the 12th of August. Their record date is a bit earlier, the 24th of July. Both of these payments together are referred to as the July dividend. And this shows the company is making good on its obligations to these investors. Now, the company is also clear that future dividend payments for both common and preferred stock are not guaranteed. They are subject to the board's decision. They will look at the company's financial health, what the law allows, and anything else they think is important before deciding to pay out more dividends. This is a critical point, especially for preferred stock where dividends are often cumulative, meaning if they miss a payment, they might owe it later. Right now, they are making good on payments for July. Looking at the bigger picture, Mobile Infrastructure Corporation, ticker BEEP, is in the industrial sector, specifically infrastructure operations. Their market cap is around $72 million, and the stock has been trading between $1.29 and $4.07 over the last year. What is interesting is that they have quite a large institutional holder, No Street GPLP, owning over 59% of the company. This means a significant chunk of the business is controlled by one entity, which can influence company decisions. This filing is essentially an announcement that they are paying their preferred dividends for July. It doesn't contain deep financial performance data, but it does confirm the company is meeting its dividend obligations on these specific classes of stock. Given the current report nature of a Form 8, these are typically used for significant material events and dividend payments, especially for preferred stock, definitely fall into that category for shareholders. The filing is signed by Stephanie Hogue, who is the President and Chief Executive Officer. This adds a layer of formality and confirms that the company's top leadership is aware of and approving these actions. When I look at this kind of filing, I see a company trying to maintain stability for its preferred shareholders. The fact that they are paying these dividends, even with a moderate market cap and significant single institutional ownership, signals a focus on their existing obligations. This is good news for those particular investors. The risk I am watching is how these dividend payments fit into the company's overall financial strategy, especially given the recent news about pushing credit maturity dates. We will need to see how their operational performance supports these payouts in the long run. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like, subscribe, and join our Discord community linked below.